Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
And welcome back to another real estate podcast right around Australia, talking what else, all about your property news and information, from the likes of New Farm in Brisbane to the suburb of Docklands in Melbourne. And good morning to wherever you might be, either inside or outside of Australia. Now, if 2026 is the year that you are going to move back to Australia, just a reminder that we've got that master list of real estate companies who we trust. You can email us myrealestatepodcast@gmail.com. Already we have helped many people looking at who do I actually engage with. So all you have to do is when you email us, tell us what city and we will make the introduction for you. It is a Thursday, November the 20th. The week has gone by pretty fast up until now. Auction markets have softened in October as buyers enjoy more choice and sellers held out for more ambitious prices. Clearance rates slipped back to 67.8% in Sydney, 66.8% in Melbourne, down from last month's highs, but still above the 60% balanced market benchmark linked to rising prices. And our friend at Domain, Nicola Powell, says strong auction volumes reflect seller confidence, but not all stock is being absorbed immediately. And with Sydney's median house price at $1.75 million, some sellers may be overestimating value in a market that's steady and not booming. So let's go to Sydney right now and catch up for the first time in 2025, the CEO of Propertybuyer, Rich Harvey. Good morning to you, Rich. Welcome back into the Real Estate Breakfast. And I just want to come back to that point about clearance rates slipping back, and more to that point that some sellers might be overestimating value in a market that's steady. How are you finding it out there?
Yeah, I've got some good data. Thanks for having me on again, Craig. Great to chat with you. And we're actually seeing some really mixed results. I mean, generally speaking, listing volumes are down significantly over their 5-year average. If you look at the core totality data, it's actually about 20% below the 5-year average. So there is a lack of listings, but in some areas, it's not all that short. Sydney auction clearance rates last week, actually on the 15th of November, were 72.6%. The week before, they were at 73.6%. And same time last year, they were at 69%. So they have gone up. I wouldn't say it's a runaway auction market. As to your point, some vendors will naturally have ownership bias. We all think our properties are worth more than what they are because we have a sentimental attachment to them. But the realistic sellers are getting them away. We're not seeing reports of massive results over auction or over reserve, I should say. Like when you tend to get auction clearance rates above 80%, that's when you hear the stories in the media of, hundreds of thousands of dollars over reserve. So I'm not saying we've got a balanced market, Craig. We've definitely got a very competitive market, and buyers that are out there need to be savvy and they need to move quickly, but there is a little bit more choice coming. I mean, it has been over the spring period, but over the, once we hit December, January, we'll naturally get that holiday season again where the listings dry up and then they'll kick off again sort of around mid-January.
Now, 2025, I know that you would have been paying a lot of attention to what the RBA was doing. In another lifetime, I think you could have been an economist. Tell me what you think is likely to happen, because there are all sorts of speculation about, no, we're not going to see any more rate cuts in 2025. Actually, was speaking to Warren Hogan a few days ago. He thought that perhaps halfway through next year, we could actually see the rates rise. He's just putting it out there. So what is your take on all of that?
Warren's Mr. Negative. I disagree with a lot of his projections, but I think obviously we've got sticky inflation. Inflation dipped below the 3% level. That's why we got the 2 rate cuts, right? But now we've ticked up above that level. The Reserve Bank is going, whoa, hang on, no, we're not going to stimulate the economy anymore. There's what's called the neutral rate, Craig, and this is where the RBA is a bit vague about what is the actual neutral rate, an interest rate that doesn't stimulate nor curtail activity too much. And it was thought that that rate was around 3%. However, now that we've got stronger inflation and also pretty robust employment, it could be that that neutral rate is actually higher. So what that means for the property market is that we had a situation where everyone was expecting more rate cuts. Some of the buyers were holding back thinking, you know what, I'll just wait till it's really at the very bottom and then I'll jump in. But that's not going to happen. And what's going to continue to happen is we're going to continue to have high demand, high immigration, very short supply of properties. We're not building enough properties to keep up with demand. I'm actually producing a major report, Craig, that I'm sure your listeners will be interested in, called The Great Supply Crunch Coming in the Next 5 Years. We're doing a deep dive into right across all the markets across Australia as to where and which cities and which regions are going to have the most critical shortage in property supply. And what that means is that's underpinning price growth. So in some areas, we're just not producing enough properties. And that's simply because construction costs are high, because we've got a very high interstate migration. Like cities like Brisbane, for example, have the highest rate of interstate migration, whereas Melbourne tends to get the highest rate of international migration. So migrants, when they first arrive, often end up in Melbourne. So what I'm saying, all of those factors are saying that we're going to see probably possibly one more rate cut next year if inflation is curtailed and then stays below the 3% band. If it doesn't, the rate cutting cycle's over and it's just business as usual. And I think we'll just have pretty stable rates for the next 2 or 3 years.
Got to ask you this one, the 5% guarantee scheme. The unit market in Sydney, very, very hot at the moment. I think we can say that. What is happening with those first home buyers? Because you are assisting and helping the mum and dad bank get the children into a unit. How much activity have you seen since that guarantee scheme, 5% came in? What sort of a difference has it made in the market that you're in?
You know what happens when you put petrol on the fire? That's what's happening, Craig. It's pretty simple, right? So when they brought in the 5% deposit scheme, I speak to a lot of mortgage brokers. Now, it doesn't mean that the government's giving you the extra 15% deposit. You have to borrow that. So the first home buyers still have to qualify for the loan, but the level of interest and the level of activity in all of the capital cities below the caps, like in Sydney, it's below 1.5, in Melbourne and Brisbane, it's below 1 million. What it's doing to the market, the lower end of the market, is pulling forward demand astronomically. So suddenly where you would have had 3 or 4 buyers, now you've got 5 to 10 buyers all chasing after that cheaper property. So it's going to push prices very quickly to the caps, right? It's quickly going to push people into those properties. So that's where you see a bit of frenetic activity and a bit of FOMO happening in that first home buyer market, because the government has decided to, it was a vote catcher, right? That's just simply what it was. It's not really dealing with the supply issue. It's just incentivizing first home buyers and say, I'll give you a leg up. I didn't get anything when I was buying my first home, Craig. I had to work hard and save my deposit, right? So the market is definitely very, very stimulated at that lower end.
And we are talking to Rich Harvey this morning in Sydney. When we come back, I want to mention this IT worker who has bought 56 properties and some of the breakdown on that. We'll talk about that after this.
Eager to expand your property expertise? Enhance your real estate know-how with us. Let's explore together the power of real estate.
So right now, let's catch up with Jade Fitzgerald. She is in Brisbane. If you have a look at the time to buy, which is a dwelling index, that jumped 10.5% and is 37% above last year. Here we go with the run-up to Christmas, the return of FOMO.
Yeah, exactly. And look, I think it's just with the market moving as quickly as it is as well. You have people sort of heading out and going and looking at properties on a Saturday, and then the agents are calling them that afternoon saying, we've got offers in, you need to basically sign a contract. They're not even allowing people really to sort of get to a position where they've got solicitors looking over contracts anymore. They're trying to get, signatures on contracts and presenting them to vendors and getting a deal done that Saturday. So it is that fast. People hit the ground running and think that they've got all their ducks in a row and they're lined up and they're ready to move. But what they don't realize is it is actually that quick, and the decision needs to be made in sort of a few hours. If they don't make it, they're made to feel like that they might miss out on it. And then there's decisions being taken in a very, very quick turnaround time.
How difficult is that when these agents are saying, you've got to act now? I mean, as far as the solicitor is concerned, if you're listening to the podcast, make sure that your professionals are across this. Don't feel in any way bullied into making a rushed decision, because that can always lead to nightmares after the contract. But yeah, coming back to you, that's your job, isn't it? To really make sure that everything is lined up and that they're not sort of being too forced into something.
Oh, look, 100%. I feel that just about all of our job is making sure that our clients feel confident and comfortable in the decisions that they are making. And yes, that does come down to a lot of, advice and direction that we can give our clients. But in saying that, if people want to put their contracts through solicitors, and it is so different in every state. In Victoria, the solicitors draw them up. In Brisbane and obviously all the rest of Queensland, it's very different. The agents can draw them up. And the FOMO that is happening within the market, it is pushing people into making these really fast, snap decisions. And they are potentially the things that are being missed and not being seen by the buyers.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
And it's a Real Estate Thursday. With us this morning is Rich Harvey in Sydney, and he is from Propertybuyer. And we want to talk about this IT worker who came to Australia as a student 20 years ago. He now owns 56 properties, including 18 that he snapped up in the past 5 years. He insists that he is not being greedy. Famous last words of any property speculator, especially investors. His $20 million portfolio earns, if you have a look at the breakdown, $780,000 in rent. He's got $108,000 in passive income with just $7.5 million in debt. What is his secret? Buying entire unit blocks. He says it's a strategy that should motivate others, despite some of the criticism that has come in from the housing-strained market. Rich Harvey, this is an area that you are involved in terms of buying entire unit blocks and helping these investors.
Absolutely. Yeah, we've bought multiple blocks for investors or bought a couple within a block as well. And we buy duplexes, we buy properties and add value to them, like granny flats and increase the income. And we also buy development sites. But for that sort of investor, firstly, you've got to have the serviceability and the capacity to buy that kind of property. But what this particular investor you're talking about is he's quite smart, and he's done what's called recycling his equity. So what he's been able to do is get good cash flow, which helps him to support his serviceability to get a loan. And then as the property market has increased in value and he's got capital gain, he's gone back to the lender and said, I want to borrow some more, and then use that money as a deposit to buy additional properties. So he's done what's called recycling his equity. And that's what any savvy property investor should do to get ahead and create a passive income through property investing. It's just about learning how to manage debt and recycle debt in the right way to leverage and maximize your wealth safely.
All right, Rich Harvey, we will leave it there. Great to catch up with you before the 2025 year ends. Enjoy the break that's coming up at the end of next month. Forget how many days until Christmas, but we are definitely in countdown mode. I know you'll be a happy man because all of that Christmas music is around that I hate. But yeah, enjoy your break and have a great New Year's as well.
Thank you, Craig. Really appreciate it.
We help to break down real estate every day to help you better understand the Australian property market.
A lot of people who haven't seen one of these container homes in person, I know they're not going to know what it feels like. So one of the big things is they say this is going to be too small, it's going to be uncomfortable. And then the second they get there and see the good use of space that we do, just makes it feel that much more open and habitable.
And what about somebody saying, well, I wouldn't mind joining two 40-foot shipping containers together so that I've got a lot more space. Have you done that before?
Yeah, we sure have. And that is probably our number one question. Rather than joining two containers together and having to spend all the additional money on welding and then also never being able to transport them again, is having, for example, two 40-foot containers side by side with a deck in between and a roof over the top. So what that does is it creates 48 square meters of living space To be able to build that deck and roof between the two is going to cost you the same to weld them, and then you can also move them in the future if needed.
We connect you to the best real estate information across Australia. The Real Estate Podcast.